Good morning, everyone, and welcome back to Morning Markets, where the team at True Potential discuss what's been happening in asset markets over the past 24 hours and how that impacts your investments. Today, we'll focus in on recapping some of the activity in markets on Friday and then look at what we can expect from the week ahead. So firstly, looking back at last week, a more volatile week in equity markets in particular, as we saw market participants start to turn their focus again to COVID-19, the rising infection rates, and also the actions that are being taken by governments to curb this and the associated impact that may have on economic activity. So slightly weaker equity markets over the course of the week. Towards the end of the week, we did see the US market outperforming Europe, and that seems to be driven by an expectation that there will be some discussions with the Democrats over the coming days about a potential support package or a further support package for the US. I'm a little bit sceptical on that, just given the electoral calendar and the distance that there still does appear to be between the Democrats' proposals and that which is likely to be acceptable to the Republican Party. So time will tell on that, but we'll wait and see. The other interesting aspect last week was just the financial or the banking sector in Europe and what we saw there. And looking back at the chart of the performance of this sector against the broader market, we can see underperformance at the absolute level. We see the index itself of banking stocks hit an all-time low during last week. Number of factors behind that. COVID-19, what does that mean for economic growth, hence the revenue prospects for banks? Also, what does it mean for bad debts and the provisioning that they may have to take to deal with loans as they deteriorate through the COVID-19 issues? In addition to that, I think there's two other factors that we have to think about there. The record low interest rate environment that we have, the opportunities that brings to banks, or I should say probably the challenges that brings, and also just the regulatory backdrop, which continues to put pressure on the earning or the return potential of banks. So a difficult period for banks and the financial sector as a whole. I think the other thing on banks, it's worth just contrasting an interview that we saw over the weekend with one of the MPC governors, where there was a suggestion that negative interest rates appear to have worked well and there hasn't been damage to the banking system in economies that have implemented those. That goes slightly against the discussion from Andrew Bailey last week, where he appeared to push back on the need for negative interest rates in the UK. So interesting dynamics starting to build within members of the MPC about the role that negative rates could provide in the UK economy as we move forward. I think the other things just from last week to touch on was what we saw in currency markets. So we saw over the course of the week the dollar strengthening against trade weighted groups, so 1.82%. Dollar sort of portraying its usual defensive characteristics in that more volatile environment. We also saw gold fall about 5% on the week. That appears on concerns of inflation, so falling inflation, which is negative for the gold price, and also just the strength of the dollar. There, typically weaker dollar leads to stronger gold price, so inversely correlated. Excuse me. The other thing then, just to touch on in that regard, is the oil price. We saw the oil price come off about 2% and a bit over the course of the week. That's a function on the supply-demand challenges, where we're seeing demand being curtailed a little bit more because of some of the restrictions that are coming into place for COVID-19, but at the same time incremental supply coming into the market from Libya. Turning to the week ahead, lots for market participants to get their teeth into and to consider. Final round of Brexit negotiations, or the final official round, one should say. We in the US, we have the first presidential election debate between Trump and Biden, with Biden leading in the polls. So this would be the first indication where we see how the the sparring between the two works and what is the issues that they take to the agenda there. And then we'll have our usual sets of economic data that will come out. Of note this week, inflation data, also the weekly unemployment numbers from the US, purchasing managers indices, and then we'll also get the Japanese Tankan, which is a business sentiment survey. So lots to think about in the week ahead. Please do join us over the coming days, and please do subscribe on the YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.